Yeah, hello and welcome to a Euro USD update. First video on this channel. So let's start with this Forex pair. I can see the potential for a larger degree A wave top in 2008. So since then, the price came down in a very, very long corrective structure. We have a lot of overlapping price action in this decline that started in 2008, possibly already ended here. That's not entirely clear yet. That was in 2022 at 94 cents basically. Yeah. So we're now watching for a potential reversal. So looking at this chart, this could become a larger A, B, C structure. As long as certain support levels are holding, especially 98 cents or 98.4 cents, this remains the current leading perspective that we should enter a larger degree uptrend. Now, that fits very well also with the idea that the DXY should enter a several year decline actually. So feel free to check our DXY updates. They are actually on the More Trading Online channel. So looking at this, we are going to zoom in a minute and take a look at the micro action. But there is also another possibility, which is basically the same scenario. However, it will delay the rally in wave C a little bit. In the white wave count, we actually see here the potential that the move down was only an A wave of this larger B wave. We're now starting a rally in a B wave and would then come down in wave C. Basically here in white, okay? And this B wave would just be here. So at the moment, I count all of B in place, which is down here, October 22, because this is an ABC structure, okay? But it could either be all of wave B or just a larger A, larger B, larger C, and this B wave is just going to be a little lower. These are both possibilities. You know, we won't know until we see the structure of this move to the upside. But in both scenarios, there should be a potential for a rising trend going forward. Now, if we zoom in a little bit, we can see if I go to the, now I need to go to the daily chart. We see that off this low that was made last year, yeah, September, October last year, at around 94 cents. The price moved up in a potential 5-wave move. Okay, it depends on how I count this. I can also put it the top here, but then it would be a 3-wave move. It would be an A wave. So again, you know, this could either be a 1-2 setup or an A-B setup with a C wave to come. That doesn't make so much of a difference. It doesn't really make a difference. So, okay, if we assume we have this 3-wave move down complete, here, completed in October this year, let's zoom in our support area, then we could have started potentially an increase, okay? We could have started that uptrend that I talked about. Now, how would that potentially look like? First of all, it's not guaranteed yet. We could still get another low, but I would argue with this move today, or, well, let's zoom in. Yeah, with this move today in the last few days, this has become a little less likely. At this stage, I would not rule out that we get basically here another low. However, with the rally above the previous swing high at $1.07, this has become less likely. So let's assume for now the low is in. And we talk about the make or break point as well, the invalidation point. We can look a little bit at a micro structure here for this rally that started in October. So we always need to know with Elliott wave where the trend is going and what are the levels that now need to break that trend again. So let's label this structure here of the lows. So my best view would be that we've had here a leading diagonal in wave 1. So if we assume a low in place, then this would be the start of a new uptrend, and we would need to see 5 waves. Okay, so this here, I would count this move up as a wave 1 leading diagonal. And then we have a very complex corrective structure here, which might have bottomed here in a wave 2. And we could now be in a third wave, and so on. So let's label that. That also gives us our basically our make or break point invalidation point. Because if we now see a break below the low of the wave 2 at basically $1.05, then we have invalidation and we likely will reset this wave 2 a little lower. That's not a problem because if we zoom out, we can see technically for this particular 1-2 setup, we could even see a decline to 98.5 cents. Wouldn't be a problem. So that's all still in play. But for now, we carefully assume that a low might be in. Again, the make or break point is very clear. We then had here, I mean, this is corrective structure, probably here A wave, off wave 2, yeah. No, probably more WXY. Let me see. Yeah, it fits better the idea of a WXY structure. WXY. And then we could have started the move now. And now key is to understand, okay, what would be a target for that third wave actually? And for that, we take the Fibonacci extension tool. We take the length of 1, go to the low of 2. And what I would like to see ideally is the 1.618 extension would be ideal, $1.08. 1083. Okay, that would be ideal for a third. Then we should get a fourth and the fifth. Could easily stretch to $1.09. Yeah, maybe even a little higher. So that's sort of how I would see this going forward. And let me see, $1.09. I mean, let me add the 2.618. I've got that. 2.382. So yeah, I would not rule out that this wave 5 stretches all the way up to $1.10. But certainly it looks like we've at least started here a local uptrend. If that grows into something larger, as I've shown you, that will become clear going forward if we fill in this pattern. So as soon as we see all 5 waves complete, there should be a 3-wave pullback afterwards. Let's zoom in a bit. Basically, these 5 waves would again fill or complete a larger degree wave 1. We should see a wave 2 afterwards, and that's how it would then subdivide higher going forward. Yeah, that's my update about EURUSD. Thanks for watching. Have a great day and have a great weekend. Bye-bye.